Welcome back to the Go Fight Foreclosure system. In this video, we will continue to discuss step 1 of the Go Fight Foreclosure system, contesting foreclosure, common wrongful foreclosure defenses before the foreclosure sale continued. Here are some effective ways to challenge mortgage lenders before the foreclosure sale. Make them produce the note. The mortgage lender is forced to validate true ownership of the note by providing the original note to the courts. The odds tend to be in favor of the homeowner because chances are the mortgage lender does not have the original note, especially if it was sold or transferred. Many mortgage lenders have tried and failed to counter this by requesting that a certified copy be allowed to be used to validate true ownership of the note. However, some have succeeded in states where judges are less sympathetic to homeowners in foreclosure. Make them show due course. Just as the mortgage lender must produce the original note document, the mortgage lender must also show how they took ownership of the note. When mortgage notes are sold, the transaction must be recorded on title in order to show that the mortgage lender has control of the mortgage note in due course. This can be a very good defense if the mortgage notes were sold multiple times, as most mortgage notes were. Predatory lending practices. Mortgages with high interest rates and questionable mortgage terms can be considered predatory lending. Predatory lending practices have been very common with subprime mortgages and mortgages offered to the poor and uneducated homeowner. Many unethical mortgage companies would write loans to homeowners knowing they couldn't really afford it. These lending practices were considered to be what caused the foreclosure crisis in the first place. However, the truth has been exposed that the real cause of the foreclosure crisis was greed. Fraudulent lending practices. This is a great way to challenge the mortgage lender if there are any issues with the appraisal or the loan documents. A common example of fraudulent loan practices would be an appraisal that would be greatly inflated in order to qualify a loan or increase the amount of fees to be charged. Another example would be when a homeowner is not properly informed or even purposely deceived in order to get the homeowner to sign off on a bad loan. There were many instances of this type of lending practices during the subprime mortgage boom. For subprime mortgage holders, this would be a good way to challenge a mortgage lender. Now keep in mind that in order to challenge a mortgage lender for wrongful foreclosure, a suit in the federal district court must be forceful.